The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, and welcome to our discussion of the 5 particular accounting reports or subsidiary journals that are critical in maintaining a proper picture of health for your company. My name is Brad, and I'll be hosting the demonstration today. If you have questions during the webinar, feel free to enter them into the questions pane on your GoToWebinar panel. If the question is outside of the scope of today's discussion, please email them to support@designmanager.com. Lastly, if you miss a portion of the webinar or want to review any of our past discussions, go to our Help Center at knowledge.designmanager.com, as you can see here. Select the Webinars menu and go down to Recorded Webinars, and you can see any of our recent past discussions. You can also go to our YouTube channel at Design Manager Inc., Design Manager INC, where you can have a listing of all of our tutorials or past webinars as well. As usual, in today's discussion, we'll be doing examples of both Design Manager and Design Manager Professional. If you have a question on one platform or the other, just enter that into the questions pane, and we'll be happy to help you out there. So let's go ahead and get started today. There are 5 classic accounting reports in Design Manager's accrual accounting model that provide great insight and analytical assistance in monitoring the overall financial well-being of the company, help you proactively spot accounting or fiscal issues, and ensure the proper regular flow of business through the company. And these reports are the Open Client Deposit Report, Open Vendor Deposit, Aged Accounts Payable, Work in Process, and the Aged Accounts Receivable Report. Now, we at Design Manager recommend reviewing these reports on a monthly basis at a minimum to help run the financial aspect of your company as effectively as possible. All of these reports reflect activity on the balance sheet, so we'll monitor the effects upon that report as well. The underlying theory is to remember that if the subsidiary journals are accurate, well, then your balance sheet has a greater chance of being meaningful as well. And if the balance sheet is in good condition, then the income statement should also be correct, and so on and so forth. Today we'll go through each report. We'll see how transactions appear on them, how they naturally come off the report, and in a similar vein, how to process transactions to get entries off when they may be remaining on the report in error. I'll present the reports in the general flow through the design cycle when the transactions first appear on them. That being said, let's begin with the Open Client Deposit Report. The Open Client Deposit Report displays deposits on proposals and retainers that you have recorded from your client but not yet applied these funds to a client invoice. The report will also show client invoice transactions that utilize retainers and deposits, just have not done so in full or closed the transaction. The report is used as a physical representation of the activity that's currently held in the client deposit liability account. If we look at our chart of accounts, we can see under our 20,000s of our liabilities, there is our 23,000 client deposit liability account. And as I said already, these accounts are all associated with the balance sheet. Liabilities are balance sheet accounts. We would see the activity in our balance sheet under our general ledger reports, financial statements. There's our balance sheet. And for those who are familiar with our reports, you can always add reports to your favorites menu simply by selecting it on the report tree, clicking the Add to Favorite button, and you can see I've done so today for several of the reports that we'll be reviewing. And here's our balance sheet. And if we print that, we can see how it's broken out into areas for assets and then our liabilities and equity. And here is our client deposit balance. Now let's go ahead and print our Open Client Deposit Report. That report is found under our Accounts Receivable reports. And there it is, about 2/3 of the way down. Again, I've already added it to our favorites so I can access it time and time again. Let's go ahead and print it and take a look at the transactions that we see. Now we have 3 of our projects. We can see our Carter's Pennington home, and they have a retainer. Very simple. Our Hilson project has a deposit on a proposal, and you can see by the type here what classification of the transaction is being listed, in this case a deposit on a proposal. Our Carter's Brigantine Beach project has a few additional transactions. They have an initial retainer, they have a deposit on proposal 1, they have a deposit on proposal 2, and we can actually see the application of the deposit. So our deposit application is listed, and that's the actual invoice that is using that portion of the deposit. And if we look over our documents in accounting, go underneath our project, let's take a look at that proposal. On our status, we can see that 3 of our items are all in black, meaning that they've been invoiced in full. So we can see that we requested and received the deposit, but in the case of items 1, 2, and 3, we've also applied or utilized that deposit. And the sum of those 3 values equals our 10, 50, 25, as the report is indicating. Had I invoiced all of the items and used all of the deposit, the deposit entry itself would have dropped off and there would be no deposit applied either. As the numbers achieve 0, they come off the report, as we'll see very shortly. Now in brief, let's go ahead and put a transaction in and see how it gets on the report. So let's add a retainer for our Hilson project. Highlight our Hilson project, hit our cash receipt button. Let's say it's $7,500. They're going to pay via check. We'll use our retainer line to enter in our $7,500. How about retainer for next phase as our transaction description? Select our entry, click OK, and there is our retainer added just that easily. And right away, if we go back to our reports, reprint our client deposit. Now our Hilson projects have their deposit as we saw previously and our brand new retainer that we just recorded. So as soon as you enter a retainer or deposit for your client, it'll appear on our open client deposit report. For more information on retainers and deposits in general, be sure to check out our webinar on our YouTube channel, Accounting Course 1, Client Deposits and Retainers. And here we'll discuss retainers and deposits at great length. So how do transactions come off the report? We very quickly got our retainer on there. How do transactions naturally fall off the report? Well, as I alluded to at the beginning, it's simply by using that retainer or deposit on an invoice that will reduce it or drop it from the report. So let's take our Carter's Brigantine Beach project and let's go ahead and invoice the rest of the items on Proposal 2. So we'll go over to our Carter's Brigantine Beach home, down to our invoices, create a new one. I'll use my proposal number filter, select Proposal 2. Outdoor living area as our transaction description. We'll use our tag all to quickly select all of the items. And just by tagging them, of course, all of our totals in the bottom left-hand corner recalculate, including the deposit that's allocated to each of the items. Let's click OK. And I'm using the modern format with the deposit column being listed. So we can see our description, our picture, price, sales tax, the deposit being applied, and the current balance on the item. And that will be listed for each one, and then summated at our totals region. By closing and accepting the client invoice, we've now utilized some of that deposit. So back on our client deposit report, we can see that for our Carter's Brigantine Beach project, our Proposal 2 deposit has dropped, and the entire client deposit balance has decreased proportionately. Let's take another look. For our Carter's Pennington home, again, we had that $5,000 retainer available. And we can see that on our Documents and Accounting window. There's our retainer. And we can use our retainer information node to see that we have the total retainer and we still have $5,000 available. If I want to use some of that retainer against one of my against an invoice, I can easily do so. So let's create an invoice for that project. And we can see I still have a small freight charge for a window treatment. So we could do a freight only for window treatment. Select our item. Along the bottom, again, there's all of our totals being calculated for us. The only area which I can type into is the retainer itself. Now I know I have $5,000 available, so I certainly have enough to cover my balance due of $63.53. So if I enter that into my retainer field, my balance due goes down accordingly. Now we can generate our invoice, which effectively is a zero balanced invoice because we're using the full retainer. So we can see there's our freight for our window treatment, our total, and the retainer is blended right into our less deposit figure for simplicity. Close the invoice, accept. Now we can see that our retainer balance has decreased. The available amount is now $49.3647. And on our report, we're going to have a new entry for our deposit applied, which is using that portion of the retainer, that's $63.53, and is decreasing the client's total available amount as well. Another handy report that provides information on all of your deposits, retainers, and how they're used on invoices is known as the Deposit Analysis Report. The Open Deposit Report, as we're observing here, only shows the transactions that are currently active or quote-unquote open. So you can gain a greater understanding of all of the deposit, retainer, and application of a project using the Deposit Analysis Report. That report is found under Project Management, Deposit Analysis. And if we quickly run that for our Pennington Home project, we can see there's our initial retainer. Here are the two deposits we received on our proposals. Then we can see the invoices that have been created so far. Here's our invoice 10,001 for proposal 1, where we're actually using that deposit. Same with our invoice for proposal 2, where we're using our 968.18. And lastly, we can see the invoice we just created, where we're using our $63.53 of our retainer, and we can even see the current retainer amount available as well. So the Deposit Analysis Report is another layer of analysis that you can use on a per project basis to go hand in hand with your Open Client Deposit Report. So on our Open Client Deposit Report, why are transactions detrimental if they are on this report erroneously? Well, for one, you're understating the value of the company. Since our client deposit account's a liability, let's imagine that we have a large client deposit balance, but we have very little in our banking accounts. Well, someone who's analyzing our balance sheet would say, you've got all this money, this money came in, but there's no money left in your accounts. Where is it? Is it going to be allocated to future invoices? It can be used as a negative marker. Another issue, let's say the client gave us all the funds for our merchandise and perhaps we recorded that as one large deposit, or rather than invoicing the client, we just put in the funds as deposits against the proposal. We're happy that we got the money, but we never truly created that invoice. So one, we never are accruing any revenue, but just as importantly, we're not generating any sales tax. We need to make the invoice to accrue the sales tax so we can properly remit that to the appropriate tax authority. It's the act of creating the invoice that generates that tax. So if all your funds are coming in as client deposits and you're not making the invoice, you're not adequately covering your sales tax liability either. Lastly, in a moral sense, perhaps the client gave you $5,000 for services and we never finished those design services, or there's a balance due, balance remaining on that retainer. We might want to actually refund the client for those, or at least credit them for future work. Here's an example. Let's take a look at our Hilson project quickly. We can see that this one deposit is almost a year old now on Proposal 1. If we look back at our documents in accounting for our Hilson Proposal 1, notice we requested $39.26, but we actually received, the client gave us the full amount of the proposal, the $8,323.12. Classic example. The client gave us all of our funds, we're happy with that, but we never made the invoice for those goods and services. So again, we never got our sales tax accrued, nor did we actually generate revenue, and we're holding all this activity in our client deposit account when it should be elsewhere in our accounting model. When removing transactions from our client deposit report, there are a few considerations that we should be aware of. Well, first, if we've already filed taxes on the previous year, it's a little early in 2017 right now, but if we're in April or May of this year, our accountant may have done our income taxes for 2016. If that's the case, we certainly don't want to go ahead and make client invoices for services or goods rendered and backdate it into 2016, which would disturb the accounts that we've already filed taxes upon. So we'd want to do all of those adjusting entries in the current fiscal year. Making that client invoice, again, let's look at if we consider our proposal for our wine cellar. If I invoice the Hilsons for that to push that client deposit off of the report, I'm going to generate some revenue along with my sales tax. With that revenue comes net income. So even though the work and the service and the goods were sold last year, I'm going to be taking my my net income increase in this current year. So be prepared for that consideration. And again, I would also be liable for that sales tax, even though the work was done last year. Because I'm invoicing in 2017, I'm going to have that sales tax liability as well. So just a few considerations there. And this is why we review the open client deposit report, to ensure that invoicing is being done in a timely manner, to monitor the proper usage of the client's funds in case we need to return it, apply it elsewhere, etc. So a very important report. Okay. Let's hop over to the professional platform and let's discuss our second report. This is the Open Vendor Deposit Report. Now in the natural design process, once you receive our deposit or retainers from the client, it's now time to start making purchase orders and, if necessary, sending accompanying vendor deposits, which are really initial funds for the vendor that they require to begin processing the order. The Open Vendor Deposit Report shows vendor deposits on project and inventory purchase orders that have not yet been applied to a vendor invoice for that purchase order. The report's also going to show any vendor invoices that do use a portion of the original vendor deposit, but leaving a balance of the deposit still available. The Open Vendor Deposit Report is going to represent the activity in the vendor deposit asset account. And we can see that under our accounting accounts. Our assets are always in our 10,000s, and at 16,000, there is our vendor deposit asset account. On our balance sheet, GL reports, just like in our Design Manager Cloud version, in our Design Manager Professional Cloud, I've already attached the reports we're discussing today into the favorites, but our balance sheet's under our general ledger, financial statements, and there it is. And now we can see in our assets area, there's our vendor deposit activity. All vendor deposits are held in this account, and it's an asset because the goods and services still technically belong to the vendor, and our company in turn could ask for those funds back if need be. Essentially, the vendor is holding our funds for future work. The activity is going to remain here until the vendor deposit is applied to a final vendor invoice. That represents the transfer of ownership of the good or service from the vendor to our company. And at that point, the activity is going to move out of vendor deposits into work in process or cost of goods sold, depending on the particular circumstance. So let's go ahead and take a look at our open vendor deposit report. And there it is. Let's see what we have here. For Curtain Calls Workroom, Legacy Antiques, and Philip Jeffrey, we can see that we have purchase orders that all have deposits associated with them that have not yet been included on vendor invoices. A Legacy Antiques, on the Hilson project, the second purchase order, we can see there's our original $2,800 deposit, and this is the vendor invoice that uses a portion of that $2,800. Remaining uses $1,200 in this example, leaving $1,600 for future use. We can see that visually if we go to our proposal window, and here's our purchase order in question. There's our $2,800 deposit sent via American Express, and there's us actually utilizing $1,200 here as well. Now, let's take a look at our Carter's Brigantine Beach project, and let's imagine how transactions get on this report. All we have to do is add a vendor deposit to one of our purchase orders. And let's imagine that we need to put a deposit on some fabric from Philip Jeffries, purchase order 1 in this case. If we go over to our accounting, bills and invoices, we'll add a new entry. On our type, we'll select deposit on project purchase order. Go ahead and use our purchase order search. And here is our Philip Jeffries purchase order for our Carter's Brigantine Beach home. If we select, let's go ahead, we'll pay via our Amex. Philip Jeffries is our vendor. We'll change the invoice date. Let's make that today's date. Same for the due date. Transaction description, as you know, these are optional, but I highly recommend them when I'm reviewing transactions they may have entered in months or even years prior. Deposit on fabric. And the amount defaulting to the vendor deposit associated amount for us automatically. If we click OK, and go ahead and post, now our entry should be on our open vendor deposit report. There's our Philip Jeffries vendor, and there it is. Today's date, there's our purchase order, and our $208. Very simple. Add a vendor deposit to a project or inventory purchase order, it's going to appear on the vendor deposit report. That's how they get on the report very simply. So how do we remove those transactions? Well, as I said before, we're going to utilize that vendor deposit against a vendor invoice. So let's imagine that one of our bills came in that utilized one of those deposits. So we'll go back to our bills and invoices. We'll add another one. This time we'll be inputting a invoice on project purchase order. Let's use one of our Hilson purchase orders for Legacy Antiques that we know has a open balance of a vendor deposit. And we can see, first off, notice that we've already purchased the dining room table and its freight, and Design Manager is automatically using the $1,600 as our less deposit. Recall, on the report, we had our original $2,800 against this purchase order for a deposit. We utilized $1,200 of it, leaving us our $1,600 as the balance to be applied on this invoice. And put our vendor invoice number We'll use today's date, just fine. Transaction description, final bill on wine cellar. And if we click OK, we can see our gross amount. There's our application of our deposit, yielding a bill of $21.20. Go ahead and post. And now, if we look at our deposit report, we can see our legacy antiques is down to the single entry for our Carter project, as we've utilized the open vendor deposit on our Hilson purchase order, dropping it from the report. And our current balance is $24.98, which should match our balance sheet exactly, and it does. So those two are in line at all times. So why would activity on this report that is incorrect be detrimental to the company? Well, several reasons. The vendor deposits are an asset, so we could potentially be overstating the value of our company. If someone comes and reviews our balance sheet and sees that we have all of these deposits out, they might be thinking, well, fantastic, there's a lot of work coming in and the company has the funds to have all these orders in process, while in reality, these work is already done. It's no longer an asset that should have been transferred into costs at some point. Secondly, well, the vendor may owe us a refund or credit if the order was canceled. If we have a deposit with them for months and months and finally the order can't be fulfilled, they either need to refund us that money or credit it to future work. So we want to be on top of it to see that the vendor is handling our funds appropriately and returning them if necessary. Lastly, and perhaps most importantly, we could be overstating our net income, as the activity really should have been pushed into cost of goods sold, as that vendor deposit should have been applied to a vendor invoice at this point. And if we look, let's take a look at our entry for legacy antiques for our Carter project. This is pretty dated, nearly a year old at this point. So there's $1,730 that Legacy Antiques has now for nearly a year. So this would give me pause. And if we look over at our purchase orders for that project, here is the purchase order in question. Notice the total amount of the purchase order equals what we sent. In other words, we sent a full deposit or a pro forma payment upon that invoice of a vendor purchase order. So we've given the vendor all of their funds. They're happy. In our mind, we've paid that vendor in full, but rather than having that move into cost of goods sold, it's sitting in our vendor deposit asset account. In other words, overstating our net income. One of the biggest fiscal issues we come across is vendor invoices or pro forma payments being recorded as vendor deposits. The vendor's been paid, but the cost is remaining in our vendor deposit account rather than going into cost of goods sold. This overstates our net income. We don't have enough costs to balance off our revenue, and we're getting income taxed on a net income that is erroneous. So getting activity off of the vendor deposit report into cost of goods sold is critical for proper financial accounting, particularly at the end of the year. While doing so, though, there are some considerations when you're removing entries from the vendor deposit report. Just like in the open client deposit report, if our taxes are already done for the prior fiscal year, you want to make any entries into the current fiscal year. So if we have a lot of old vendor deposits that need to be removed by creating a vendor invoice for them, even if the balance due is zero, all of that cost will be realized in the current fiscal year, making the net income of the current fiscal year reduced, which is not necessarily a bad thing. So we want to review our vendor deposit report on a timely basis to ensure that orders are being properly filled by the vendor, and most importantly, to ensure that we're accurately recording our cost of goods sold so we don't overstate that net income at the end of the year. Okay, let's go to our third report. When we enter our vendor deposits, vendor invoices, or operating expenses necessary to run our company, they're first going to move into the accounts payable liability account, provided that the entries were not charged to a credit card or payment otherwise indicated, of course. And those entries are going to wait in that accounts payable account until we make a final payment, or we cut a check, or we pay via debit card or on our credit card, etc. The accounts payable account is also a liability account, as the company is required to remit payment at some point to alleviate that debt. So if we look at our chart of accounts, we're going to see our accounts payable, there it is, in our liabilities along with our client deposit account that we looked at before. And again, if we review that on our balance sheet, we can see our accounts payable in our liabilities section along with our sales tax that we're going to owe, our credit cards, etc. The Age Accounts Payable report is going to list all of these entries. Now, and it does tend to not have as many unnoticed or outdated transactions lingering as some of the other reports that we're going to discuss, because your vendors are going to usually let you know if you owe them money, and you're very cognizant that you do owe vendors money. That being said, monitoring our Aged Accounts Payable report is going to help keep a better perspective of our cash flow status, and we're going to be very cognizant of outstanding bills and how they're ultimately going to reduce our cash balances. So knowing what bills we've entered that still need to be paid really keeps us on top of our cash flow and where funds are going to be allocated in the near future. Ideally, the Aged Accounts Payable report is going to match transactions on our checking window Pay Print tab. So if we look at our Pay Bills and Checkbook, here are all of the entries that we've added into Design Manager that have not yet remitted payment for. For our professional users, you access the same window under your accounting, payments and checks. And there it is. And if we go ahead and run our accounts payable report, which would be under our accounts payable folder logically, there it is. And again, I've attached it to our favorites. Here's our Aged Accounts Payable report, and we can see that we have entries for America's Mattress, Baker Knapp and Tubbs, Century, FedEx, our real estate group, etc. So our Aged Accounts Payable report does indeed match our Paid Bills Print Checks tab on our checking window precisely. So let's go ahead and take a look at some of the entries on this report and see what that indicates to us. So we can see that we have operating expenses for Federal Express. We have a few expenses for our real estate company, or our rental that holds our that we pay our rent to. We have traditional vendor invoices for America's Mattress, Century Furniture, Baker Knapp and Tubbs. But with Baker, notice that we have the bill itself and we have a hand check or a indication of a partial payment. So out of that $1,450, we've already paid $725. Again, that matches our Pay Bills Print Checks precisely. We can see that our original amount was $1,450. We've already paid $725, and we still have $725 to pay. Getting entries onto the Aged Accounts Payable report is quite easy. Just put in a bill and don't pay it at the present time. So let's imagine that we got our utilities bill came in. So if we go to our Documents in Accounting, go down to our Vendor view, here is our energy company. We'll enter in an expense. January 2017 is fine for our invoice number. We'll use today's date as the invoice date. Transaction description, January 2017 is fine there as well. If we click our Add button, that gets us to our vendor invoice distribution, and I already have my gas and electric expense account associated with that vendor. For those of you who don't know, if you look at your vendor glossary, here's our energy company. On our defaults tab of the vendor payee window, you can associate an expense account with a particular vendor. That way I don't have to remember to always use that 61600 expense account when I'm entering in my bills. And let's imagine that's still, I don't know, 285.14. Click OK. I'm entering in a bill, but is yet unpaid. So naturally, I imagine to show that on my checking window, Pay Print tab, and there it is. And if it's listed there, it should also be listed on our Aged Accounts Payable report as well. And there it is. So by entering in a vendor invoice, vendor deposit, or operating expense, and not yet remitting payment, cutting a check, indicating payment on credit card or online, it's going to remain on our Aged Accounts Payable report. Very easy how entries get on the report. Well, how do they come off? Just by indicating that they've been paid. So let's go to our checking window Pay Bills tab again, and here's our FedEx entry. Let's imagine that I just pay that via credit card. I can select it, hit my credit card button. My Amex is already selected for me. Today's date is just fine for the payment date. That gets us to our payment list, which I like to print out or store on my computer for or my network for records. Accept our payment list, and just like that, our FedEx entry drops from our Pay Bills Print Checks tab, but we're now going to see that under our credit card activity for our American Express, and there it is. And if we look at our Aged Accounts Payable report, we can be fairly confident that our FedEx entry has dropped, and so it has. If Century Furniture, perhaps we want to send a check for them. So if we're going to cut a check for Century, we're going to select our tag, hit our checks button, select my appropriate checking account. I only have one, but if we have multiple, be sure to select the correct one. There's our next check number generated for us at 10,008. Hit our print post. Ensure that I have the proper printer selected that contains my checks. Click OK, and I have our print preview of my no-code check form, and this is our middle check form. I would print that out onto the check itself, of course, and once the print job is completed successfully, I would close and accept. And just like that, our entry for Century drops off our Pay Bills Print Checks, and we would see that listed now under our checkbook, and there it is. And just like that, we should also see on our Aged Accounts Payable report that our entry for Century is also no longer on the report, and it's not. And now our current accounts payable balance is down to $5,260.14. I would imagine that's going to match the account balance on my balance sheet as well, and it does indeed. So effectively, we're reducing our liability accounts payable account by paying them. We're correspondingly reducing our cash checking as well. Or in the case of us putting the FedEx charge on our American Express, we simply shifted the liability or the debt from accounts payable, and we increased our American Express account balance. So we can see as activities occur how various areas of our balance sheet and ultimately our income statement as well all affect one another. Again, reinforcing the idea of if we keep monitoring our 5 monthly reports at a timely basis and keeping those entries accurate, all of these important financial statements will be accurate as well. Why would transactions on the aged accounts payable report be detrimental if they are incorrect or if they are getting timely, etc.? Well, very frequently, transactions on here tend to be duplicates. I entered a bill, I paid it, I forgot that I paid it, I entered it again, and now it's sitting on our report for quite some time. Doing so, well, that's going to be understating our net income. That expense or perhaps additional purchase is going to be either increasing our expenses or our cost of goods sold, and it's going to make us look like we're actually making less money than we really have. And of course, we certainly don't want to pay the vendor twice if we don't have to, and then have to deal with the whole refund or credit situation as well. Further, bills that remain actual bills, say it's a legitimate bill that I simply haven't paid yet, if that's remains unpaid for quite some time, it can affect both your company credit, of course, and it's also a marker against the strength of the company. If you get your company appraised or evaluated for sale and you provide all of these reports, the individuals who are looking at the strength of the fiscal strength of the company are going to use bills that are unpaid for quite some time as a detrimental marker against the strength of the company. So the short answer there, or the short point there, is paying bills timely really makes your company look as strong as possible. And if we look back at the report, let's take a look. Very easily, looking at my renter company, Princeton Real Estate Group, I inadvertently, or someone inadvertently, entered the bill for our rent twice. I can see that I've used different invoice numbers, so Design Manager does not automatically warn me if I'm putting in the bill twice. If I used 02-01 in both cases, I would at least be warned, but in this case, I added them both in. Luckily, I can easily get rid of these because they are unpaid. I go to my Pay Bills checkbook. Let's select one of the entries, use the Go To button. I can quickly get to the particular folder for the Princeton Real Estate Group, and to remove the duplicate entry, I simply need to void. And now that entry drops off the Pay Bills Print Checks tab, and it would of course also drop off our Aged Accounts Payable report as well. We can see that the total balance is gone and we have a single entry for our rent. But our expenses just went down. So we are right now looking at the company's more profitable than it was a mere few seconds ago. Here's some considerations about removing entries from this report. Well, just as we did, we voided this transaction, and in this case it's going to certainly increase our net income. And if the entry is from last year and I am voiding it into the current year, I'm going to be liable for that increase in net income as I pay my income tax at the end of this year. If the transaction's in a fiscal year, we've already done our income taxes, we might need to make an offsetting transaction. If you simply void a transaction in Design Manager, it'll always use the original fiscal month. If I want to have the transaction drop in the current fiscal month, I have to do so manually. Excuse me. As such, let's imagine that our America's Mattress invoice, for whatever reason, is ultimately canceled, and they're going to refund us or ultimately give us some sort of credit. I need to have it come off my Aged Accounts Payable report. What we could do in that case, go to our Documents and Accounting, go down to that particular purchase order. There it is. I'm going to enter an offsetting entry by creating a new vendor invoice, offset old bill, old invoice. I'll use today's date because I don't want to affect my prior year. I'll use the same information in my transaction description, but here I want to use my edit button to indicate that I'm inputting a negative value. And if we click OK, you can see here's our original bill from several months ago, and it's reverse, or it's offset, but they're being done in two entirely different fiscal periods. And on our pay bills and print checks window, we can now see there is our original and our brand new offsetting or reversing entry. To have them drop off entirely, we simply tag or select, and we use the offset button. This simply closes all invoices for a particular vendor that net out to zero. By doing so, they drop off our checking window, and as we've seen time and again now, they will also drop off our aged accounts payable report as well, and they have. So that's a very easy and convenient way to have the entries removed, but you get to choose the fiscal period in which you're doing so. So, in general, we want to be sure that we review our accounts payable report to make sure the bills that are listed are accurate and that we are paying them timely. That will protect our company credit and overall strength and reputation of the company. And we can get rid of incorrect transactions to adequately reflect the company's net income and current liabilities. And along with all of these reports, doing so on a monthly basis keeps you have a much better chance of remembering why a transaction was entered in the first place rather than trying to do so months or even years later. And that gets us to our next, or our fourth of our 5 reports, our work in process report. Excuse me. When we receive and record an invoice or bill from the vendor, by default, Design Manager is going to record the cost of those goods and services first into the work in process asset account. And it's going to remain there until the client is invoiced for that good or service. At that point, the cost is going to be relieved from work in process and will move into the appropriate cost of goods sold account. The client invoice, in effect, represents the transfer of ownership from our company to the client. Work in process is an asset account, as your firm technically owns that good or service until the client is invoiced. You can conceive of work in process almost as the company's inventory that's been pre-allocated or already allocated to current projects. And on our chart of accounts, we can see our work in process right in our asset area along with our vendor deposits as well. And so on our balance sheet, we would see our work in process with our assets as well. For a full discussion on work in process, which is integral to the design business, you can see our discussion on work in process, again, on our YouTube channel at Design Manager Inc., Design Manager INC. The work in process report needs to be reviewed frequently to ensure that you're invoicing your clients for merchandise or services which you've already paid, and it can further help catch additional charges such as freight or shipping, reimbursables, etc. that could easily get overlooked and should indeed be invoiced to the client for reimbursement. The work in process report is under our accounts payable reports, work in process, which again I have attached to our favorite reports. In our professional platform, that would be under our accounts payable AP reports, and there's our work in process. Let's go ahead and print it and take a look at what information is listed on this report. Let's make this a bit larger so we can see. Okay, so we can see our Hilson Pocono home. There are several tons and tons of furniture that we've purchased traditionally from a variety of our vendors that's simply waiting to be invoiced to the client. We can see all sorts of goods from Legacy Antiques and Century Furniture. Our Carter's Pennington home, we have a rush charge for some fabric, and perhaps that needs to be reimbursed to the client. We need to invoice the client for that $55. On our Carter's Brigantine Beach home, we have a restocking fee. Maybe that's something that was a cost that came in that we're not going to invoice the client for. We're simply going to absorb it. But we do want to get it off of our work in process report so it goes against our cost of goods sold. Let's see how entries get onto the work in process report. Well, very simple. Let's go ahead and put a vendor invoice in under our bills and invoices. Add. Again, in this case, we're going to use an invoice on project purchase order. Let's use one of our purchase orders as an example. Here's one for Philip Jeffries for some fabric. Invoice number in, today's date, final bill on fabric, and if we click OK, we post our vendor invoice, that activity is going to go into our work in process account and should be seen on our work in process report. And there it is. Our brand new entry from Philip Jeffries that we just added is now waiting for invoicing to the client. So we have that, we've received that fabric, we've recorded the bill for it, and now technically it's part of our company's assets. We own that fabric until we in turn invoice the client for that fabric. So let's see how that works. We very simply got our fabric onto our work in process report. Let's create an invoice for some items that are already on the report to see how they drop off. And since our Hilson Pocono home has several items, let's use that as an example. So we'll go to our accounts receivable, client invoices, click add, put in our Hilson project, and let's go ahead and invoice some of our items from proposal 1. Transaction description. This is our wine cellar. We'll tag all. Here's our invoice ready. This is our deposit being used. And this is our example where the client gave us all of our deposit up front, tying in some of our concepts right now. Even though the balance due on this invoice is 0, we still need to make the client invoice to get our sales tax accrue, to accrue our revenue, and to move costs out of work in process. So as we go through our reports, we're seeing how all of these concepts tie together. Click OK. Let's go ahead and print our invoice. Go ahead and post and accept. And now let's reprint our work in process report. And we can see quickly that our Hilson activity has decreased substantially. Those goods, all that activity is now out of our work in process asset account and is into our cost of goods sold account. And we can see, if we look at our balance sheet, that our work in process has decreased appropriately. And now that activity is over on our income statement side. Why would transactions on our work in process report be detrimental? Well, obviously you need to invoice your clients for merchandise or services that you've purchased from your vendors. You want to keep your cash flow at an adequate level, so if there's still a balance to be paid on those goods or services, you certainly want to do so by invoicing your client. Further, you don't want to miss any incidental charges. Very frequently we see freight, restocking fees, as we had in our examples, that come in after the client may have been invoiced and are now remaining on our work in process, and we need to push those through the cost of goods sold. These charges can have a big effect on our net income if not reimbursed by the client, or at least if we don't get them out of work in process into cost of goods sold so our net income is accurate. If costs are inadvertently remaining in your work in process, your COGS, your cost of goods sold, is going to be inappropriately low, which gives you a higher net income and gives you a higher tax burden at the end of the year. Let's look at our report again. Here's an example. Our restocking fee for the Carter's Brigantine Beach home. This is one that we said, well, it's a misunderstanding with us and the vendor. We're not going to charge the client for us, but I still need to get this $40 off of our work in process report. Here's how we do so. Go back to our bills, back to our client invoices. Going to add, put in our project. Here's our restocking fee. I'm going to click the override button, and I'm going to tell Design Manager that I want to charge the client $0 for this restocking fee. In other words, I'm making a zero balance invoice. On my override window, I click the override button. I set that to $0 on both my price to invoice and taxable amounts, and I click the OK button. Notice that Design Manager indicates that the item is in override mode by having a red checkbox in the override column, and I select the item. All my transactions at the bottom are listed at $0, the price, sales tax, deposit, balance due, etc. If I click OK, I have my $0 balance invoice. I'm not charging the client for anything. I'm not taxing them, certainly. I'm just going to move that activity out of work in process. Click the Print Post button. I can see on my invoice everything is set for $0. I'm absolutely fine with that. That's exactly how I want the invoice to appear. Close and accept. All I'm doing is moving that activity out of work in process. Let's take a look. Print the report. And we can see our restocking fee is off of our work in process report, out of our Carter's Brigantine Beach home, and now that $40 is appropriately over in our cost of goods sold or expense account, as the case may be. When you're getting ready to remove erroneous transactions from your work in process, you should consider a few things. Removing entries is going to increase your cost of goods sold. Particularly in our case where we made a $0 balance invoice, we're going to have our cost of goods sold increase with no corresponding increase in revenue. So our net income is going to go down, and we'll have a smaller tax burden, generally not a bad thing. But if the entries are from prior years, fiscal years, and the taxes are already recorded upon them, again, as I've said before, you want to make sure your $0 balance invoices are in the current fiscal year. So, in general, the key with the work in process report is to get entries off of there, you're going to have to make a client invoice. Either truly invoice the client for the sale where they can remit payment upon it, or if we're simply passing the cost through, we'd make a $0 balance invoice as we did in our final example. So our work in process report really allows us to ensure that we're invoicing our clients for goods and services that we've purchased in a timely manner, and we're making sure that any costs that we may have accumulated, even if they're not being passed on to the client, are getting appropriately allocated to our cost of goods sold. Okay, on to our fifth and final report, the aged accounts receivable report. After we've begun invoicing our clients for the finalized goods and services, the balance or the unpaid balance of client invoices remain in the accounts receivable asset account until the client remits final payment. The accounts receivable account is an asset because the company, our company, is under firm expectation that payment from the client will indeed be received at some point, thereby increasing cash flow, in other words, reallocating the asset. And we would see our accounts receivable account right at the top with our other assets, and would correspondingly be on the balance sheet in our asset area as well. And there it is. much like the aged accounts payable report, the aged accounts receivable report tends not to have quite as many unnoticed, outdated transactions, as the company's naturally going to be more aware of when a client owes us funds and they have not yet remitted payment. But still, monitoring the aged accounts receivable report really keeps you abreast of clients that might be running lengthy balances, and it's also going to alert you for any errant or duplicate invoices as well. So let's take a look. The aged accounts receivable report is logically under the accounts receivable folder at the very top. And of course, it's on my favorites as well. And here it is. Let's see what we have on this report. Now we can see for our Carter's Pennington home, we have 2 invoices, and I would say that they're both getting a little bit on the aged side, and that I might want to start pushing for payment either by sending the client a statement, or I would consider perhaps doing a finance charge, particularly in the professional platform, which does that automatically if desired. In our Carter's Brigantine Beach home, we can see a few invoices, both with payments. The first has a traditional almost half payment upon it, which we can see listed right beneath the invoice itself and the current balance due on the invoice, while invoice 10,004 has a very slight underpayment, very common occurrence. The client perhaps simply misread the invoice or gave the wrong check amount, etc., leaving a nominal amount on that invoice. And here is the invoice that we just created for them while we were doing some of our other examples today as well. And down at our Hilson project, we can see, well, right away, this is a red flag, as this invoice was dated back in December of 2006, and our company didn't exist at this point, so I immediately know that something has gone awry in that case. So, getting entries onto this report, very easy. Simply invoice the client with a balance due on that invoice, and it'll appear on the aged accounts receivable report. So let's go ahead and make an invoice for our Hilson Pocono home. And let's focus on the wine cellar again. Final bill for wine cellar. I'll use my tag by location, wine cellar. There we go. Oops, let's do the outdoor living area instead. There we go. For outdoor area. And notice there's our balance due. That's the part of the invoice that's going to put it on our accounts receivable report. Go ahead and print and accept. There's our balance due as expected. There's our invoice. Notice it's in our open invoices area, indicating again that there is a balance due. So we would logically see it on our accounts receivable report as well. And there it is. And we've increased our accounts receivable balance accordingly as well. Very easy. So our now report says $23,363.78. I would imagine that our balance sheet also has the exact same figure in our accounts receivable asset account. And so it does. So how do we get transactions off the report? Making invoices puts them on the report. Well, receiving payment on those invoices would drop them off naturally. So let's imagine that the Carters have given us the final payment on invoice 10,003. They currently owe us $405.28. Let's imagine that that check just came in. So if we go to our documents in accounting, down to the Carters, we can see our invoice 10,003 still indeed has that balance due on it. Click our cash receipt button. Input the information of the check. Let's imagine they simply gave us the $405.28 in this case. Put our check number in. Today's date is just fine. Our invoice is already selected as we had it highlighted on our documents and accounting tree. So our payment and our receipt match perfectly. Click OK. And we can see that our invoice now dropped out of the open invoices folder and is listed in our closed invoices. So I would imagine that we would then see that invoice drop off the report, and we do. So now for our Carter's Brigantine Beach home, we only have that one invoice with the nominal $5 balance due on it. And if we look at our balance sheet, we can see all we've done is lower our accounts receivable but increased our cash checking. So essentially we've just reallocated that asset, taken out of accounts receivable and put it into our more tangible cash. What about some of our other entries? We can see speaking of that $5, how would we get an invoice like this off of the report? Well, we can do what's called an invoice adjustment. Invoice adjustments really have two primary functions. One is in a case like this. If the client simply underpaid by an amount that we deem not necessary to collect upon, we can adjust or reduce the accounts receivable balance on that invoice. The other purpose would be to record bad debt. If the client simply is not paying for dispute, we could then adjust the invoice to a bad debt, either revenue or expense account, depending on our accounting professional's preference. So to do so, go to our documents in accounting. Let's go down to our invoice, which has the $5 balance, and we click the Adjust button. We use the Adjust Invoice Amount. When making an invoice adjustment, we have to input a general ledger account. I usually use the account that represents what was originally sold on the invoice or what was the majority of the sale, but it's often a revenue account, and in this case, it was furniture. Remove small balance as a transaction description, and my adjustment is going to be entered as a negative value in this case to reduce the balance due down to 0. With the general ledger account, very frequently it's going to be either a revenue account to reduce the revenue, or it's going to be the bad debt expense account as I just discussed. It is never going to be the accounts receivable account. That's very common thinking. But just by making the invoice adjustment, we're already reducing the accounts receivable account. It's also never any of your cash or other asset accounts. If you feel compelled to do so, just give our support team an email at support@designmanager.com, and they'd be glad to give some assistance in that case. If we click OK and accept the invoice adjustment, also that invoice drops out of our open invoices, and we now see it in our paid invoices as well. In our professional platform, invoice adjustments are done under our Accounting tab, Accounts Receivable, Client Invoices, and Existing tab. And here we could select our invoice and hit the Adjust button, Add, and then you can see the window is very similar from that point on. Also on our YouTube channel, we have a webinar dedicated just to invoicing, where we go into detail on a lot of these topics as well, so feel free to examine that. If we look back at our accounts receivable report, we can see that our $5 balance is often also removed. Now, let's take a look at that invoice back in 2006. Well, certainly that was probably supposed to be 2016. In this case, I want to credit that invoice in its entirety and recreate in the proper period. To do that, go back to our documents in accounting, Let's go down to our Hilson invoices. Here's our stone table. We want to void or credit. If I certainly could not put that back into 2006, as that is completely erroneous, but I could put it at the end of 2016 if desired. My taxes are not filed yet for this particular 2016, so I could put the credit into the end of last year. When in doubt, ask your accounting professional. Correct date. We'll print a copy for ourselves. There's our offsetting or credit memo. And if we accept, we're now reversing that invoice. Now we can recreate. Simply by making a client invoice again, we'll use the original date of 16. Stone table. Select our stone table, and now we're ready to go. And there is our invoice as of last year, December 5th. Accept. Great. We've corrected the invoice, and on our accounts receivable report, we can see the original entries dropped, and now we've replaced it with a new invoice for 2016. So, transactions on your accounts receivable or your aged accounts receivable report. Well, why would some of these be problematic? First, allowing clients to maintain long balance periods can really hinder your cash flow. So you want to ensure that you're sending statements or otherwise gently indicating that payment is now due. Any invoice that should not be on the report, as to duplicate as we saw, or there's an unpaid balance, we want to really remove them from the report because it's not maintaining the proper asset of our company. If there's never going to be payment upon an invoice, it should be adjusted as such. If the invoice is made incorrectly or it's a duplicate, it also needs to be credited or reversed to reduce our net income, bring down our sales, have our sales tax credit, etc. That being said, when we do credit or adjust unpaid invoices, we're almost always going to be reducing our revenue, so our net income will be going down as well. And if we create a credit invoice, as we just did for the Hilson Pocono home, we may also be generating a negative sales tax as well. So we want to use our aged accounts receivable report to ensure that our clients are paying us in a timely manner, and we want to ensure that any duplicate invoices are not being listed. Any invoices that have a small over or under underpayments can be adjusted off appropriately so they drop off the report. Any invoices in dispute can also be handled, etc. And that takes us through our 5 monthly reports to review. So today we tried to examine our 5 critical subsidiary journals and how I tried to describe how they're really invaluable in monitoring and keeping the health of the company in good standing. As we saw, all of these reports affect our balance sheet because each of them are either in our asset or in our liabilities area, and tangentially, that's going to affect our income statement and other areas of our financial software as well. So if we ensure that our information on these 5 reports are accurate and we monitor them on a monthly basis, we're really going to undoubtedly put our company in the best position for financial success. And with that, I'd like to thank everyone for joining and staying with us on a very lengthy webinar today, and I hope to see you again in the future.